Nvidia just announced $1 trillion in orders, a new AI agent platform, a new inference chip, a new CPU going after Intel directly, and a chip for data centers in space. The stock went up 4.8% during the keynote, then fell back down. And right now, Nvidia is sitting roughly 11% below its all-time high. Here's the thing. Wall Street remains overwhelmingly bullish on this stock. The consensus price target sits well above where the stock is trading right now, implying significant upside, according to analysts who cover it professionally. So the question is not whether Nvidia is good. The question is, what did the market miss this week? And there is one announcement that most people are getting completely wrong. It is called NemoClaw. And if you understand what it actually is, not what the headline said it was, you will see exactly why this week matters more than the stock price suggests. Let's get into it. Forget the name for a second. To understand NemoClaw, you need to understand one product first: OpenClaw. OpenClaw is a platform that lets AI agents run autonomously on your computer. It can book your meetings, draft your emails, write and execute code, browse the web, all by itself in sequence, without a human approving each step. It became one of the fastest growing open source projects in the history of software. OpenAI acquired it and its creator. So here is the problem. Imagine deploying that inside a bank, or a hospital, or a law firm. An AI agent with access to every document, every email, every client record running autonomously with no guardrails. Meta banned employees from using OpenClaw on work devices. That is the problem NemoClaw solves. NemoClaw wraps OpenClaw inside Nvidia's OpenShell runtime, part of the broader agent toolkit that Nvidia officially launched at GTC. It adds policy-based privacy controls, sandboxed execution, and the ability to run AI models locally on dedicated hardware instead of sending company data to a cloud server. In plain English, it makes autonomous AI agents safe enough to deploy inside a real enterprise. Now here's the strategic part, and this is the bit most coverage completely missed. NemoClaw runs best on Nvidia hardware, specifically the DGX Spark, the DGX Station, and the RTX Pro systems. Every enterprise that builds their internal AI agents on NemoClaw becomes more dependent on Nvidia's hardware to run them. Jensen Huang said it himself at GTC. OpenClaw is the operating system for personal AI. This is the moment the industry has been waiting for. Think about what that means. NemoClaw is the attempt to do that again, in software, in agentic AI. Before anyone else sets the standard, the agentic AI market is projected to reach $28 billion by 2027. CUDA was released in 2006. For years, almost nobody used it. Then in 2012, a research team used it to train a neural network that won an image recognition contest by a margin so large that the entire field of AI changed overnight. Every major AI model, since every single one, was trained on Nvidia hardware running CUDA. 20 years of developer habit became the most durable competitive moat in technology. Dell is already shipping hardware built for NemoClaw today. The Dell Pro Max with the GB10 chip available right now starts at $47.56. This is not a future product. It is shipping. NemoClaw was the software story. But GTC had 3 more announcements that matter. The inference push. Nvidia moved deeper into inference, including new architectures and partnerships focused on speed. The result is a new language processing unit designed from the ground up for one thing: running AI inference at extraordinary speed. Here is why that matters. Nvidia's GPUs are incredible at training AI models. They are less efficient at inference, the part where the model actually answers your question, generates your image, runs your agent. As AI moves from training to deployment at scale, inference becomes the dominant cost. This new inference chip fills that gap. High-speed inference sitting alongside Vera Rubin systems in a single rack. Training and inference solved in the same architecture. The Vera CPU. Intel and AMD have owned the CPU market for decades. Nvidia just walked in. The Vera CPU is designed specifically for agentic AI, the kind of sequential, decision-making compute that CPUs handle better than GPUs. Agents that plan, decide, execute, loop back, and decide again. This is not a coincidence. It is the same move Nvidia made with networking when it acquired Mellanox in 2020. People questioned it at the time. Today, Mellanox is a core revenue pillar. The trillion-dollar demand outlook. Jensen Huang said it on stage. More than $1 trillion in revenue opportunity for Blackwell and Vera Rubin systems through 2027. 1 year ago at GTC, that number was $500 billion. It doubled in 12 months. While the market was questioning whether AI spending had gone too far, the space chip, Nvidia announced Space One Vera Rubin, a chip designed for data centers in orbit. This is early stage, but when Nvidia starts designing products for outer space, the addressable market argument has no ceiling. Literally, here's what most coverage got wrong this week. The stock went up 4.8% during the keynote, closed up only 1.7% that day. By March 19th, it had fallen to $107.93, down more than 3% from where it was before GTC started. And people said the market is disappointed. That is the wrong read. There are three things happening simultaneously, and none of them are about whether Nvidia's technology is good. First, the news was already priced in. Wall Street analysts had set their targets before GTC. Those price targets were built on expectations of exactly this kind of announcement. When reality matches elevated expectations, the stock does not move. That is how markets work. TD Cowen put it directly after the keynote at a $4.45 trillion market cap. Traditional equity dynamics no longer apply. The stock is so large that fund flow constraints and portfolio construction rules limit how much institutional money can add to the position, even when the fundamentals get better. Second, macro killed the signal. As Gulf energy attacks escalated through mid-March, Brent crude spiked intraday toward $119 per barrel, with risk-off sentiment hitting the entire semiconductor sector simultaneously. Risk-off hit the entire semiconductor sector in one session. The GTC announcements did not fail. They got buried under a geopolitical event that had nothing to do with Nvidia's technology, its orders, or its roadmap. Third, sell the news as a pattern, not a verdict. After GTC in October 2025, Nvidia's stock dropped 2% the next day. After GTC 2024, muted reaction despite strong announcements. The market buys the expectation going in. Then rational short-term traders take profits after the event. That is not the market saying the thesis is wrong. That is the market functioning normally. Wedbush's Dan Ives put it plainly, Nvidia is alone at the top of the AI mountain, 2 to 3 years ahead of anyone, including Google. The flat stock price this week is a market mechanics story layered on top of a Middle East oil spike. It is not a verdict on where Nvidia is going. The honest version of this story includes the risks. Hyperscaler custom silicon is real. Google builds its own chips, TPUs. Amazon builds Trainium. Meta has its own program. Every inference job that runs on a custom chip is a job that does not go to Nvidia. NemoClaw is partly Nvidia's answer to this deepening software lock-in to offset potential hardware displacement at the top tier over time. AMD is real but limited. The MI300X is a credible alternative for specific workloads. Some hyperscalers use it. But AMD does not have CUDA's 20 years of developer ecosystem. And that gap is not closing, it is widening. The valuation demands execution. Year-to-date, Nvidia is down nearly 2%. 1 year, it is still up more than 50%. This stock requires flawless execution to justify its multiple. Any slip on Vera Rubin delivery, any slowdown in NemoClaw enterprise adoption moves this hard and fast in the wrong direction. The keynote is over. Here is what actually matters now. Signal 1, NemoClaw Enterprise Partnerships. Software launched in early preview on March the 16th. It is not production ready yet. Nvidia has reportedly approached Salesforce, Cisco, Google, Adobe, and CrowdStrike. Watch for formal announcements over the next 90 days. If enterprise partnerships land, the software moat thesis becomes real revenue. If they do not, NemoClaw stays a developer story and the market reprices the software narrative. Signal 2, Vera Rubin delivery. Shipping second half 2026. That is the product the trillion-dollar backlog is built around. Watch TSMC capacity announcements and any supply chain commentary from Nvidia's hardware partners. A slip in Vera Rubin is a slip in backlog conversion, and the stock reprices the timeline immediately. Signal 3, hyperscaler earnings calls. Every quarter, Google Cloud, Amazon Web Services, and Azure revenue growth rates. If those accelerate, the AI spend is working and Nvidia's demand stays durable. If they disappoint, the market starts asking whether $650 billion in annual infrastructure spend was too aggressive, too fast. Those three signals will tell you more about Nvidia's next 12 months than anything from the GTC stage. Here is the one-line summary of this week. Nvidia pointed to a $1 trillion AI demand pipeline, launched a new software platform that could become the CUDA of agentic AI, unveiled a new inference chip, a new CPU, and a chip for outer space. The stock went sideways because of a macro headline and a market that had already priced in good news. Those are two completely different stories. The question now is not whether Nvidia is dominant today. That part is settled. The question is whether NemoClaw becomes the standard before someone else does. Whether Vera Rubin ships on time, and whether that trillion-dollar demand pipeline converts into earnings per share the way the outlook suggests it should. If it does, the analysts with consensus targets well above the current price are going to look very right. If it doesn't, there is a long way to fall from a $4.45 trillion market cap. That is the actual bet. If this breakdown was useful, hit like it genuinely helps the channel. Drop any tickers or topics you want covered next in the comments. I read them all. Subscribe and hit the bell. The next video covers how the US and China tariff situation could affect Nvidia's revenue and what the export restriction story means for the trillion-dollar backlog. You don't want to miss that one. See you in the insurance.